Hi everyone, welcome back to my channel Achieving Alpha. And very firstly, wishing you all a very happy new year. I know it's been quite late, but it's been quite some time that I have uploaded a video on this particular channel, and I was just busy with my personal stuff and work. So yeah, no issues. In this particular video, we are going to talk about two US stocks that I am betting quite heavily on, and these two stocks are primarily from the AI sector and the fintech sector. Now, one of the very successful investors in India, which is Mr. Ramesh Damani, has said that you should always try to invest in the sectors or the companies which you have the most understanding of. So, in my case, since I work as a data scientist and I have recently started working in the fintech industry, applying data science to fintech problems. So, I think I have a decent understanding of AI and fintech. And of course, as I progress in my career, I gain a better understanding of both of these particular fields. So that's one of the reasons that I have picked these two stocks from these two sectors. And secondly, these are two very popular growth stocks in the US market. So as someone who is only having context about Indian markets, that could be the reason that most of you might not have heard about this. But recently, I have been paying quite some attention to the US markets and have been basically tracking the US markets quite actively. And on a personal note, just a disclaimer or just a disclosure that I am personally invested heavily into these two stocks. So you might have that sort of a bias, but nevertheless, I am just going to provide you with my points as to why I chose to invest in these particular companies and where I see them in the next 5 to 10 years. And I see some massive upside potential in these two stocks. So I can see an easy 10x upside potential or maybe more in the next 5 to 10 years, or that is at least what I see. I might be wrong. That's no big deal. Even the largest of investors go wrong, so there's no nothing wrong about that. But yeah, I have some really good conviction in these two stocks, and that's the reason that I have picked up these two stocks. So before I basically reveal the name of these two stocks, I'm going to say that these two are growth stocks. So they are not like your simple value stocks in the US. So a value stock in the US could be something like Apple, which is already a $1 trillion company and is having a positive cash flow, is making decent profits, and it's overall it's in a good financial health. Now, the thing with growth stocks is that these might not be profitable, which in this case, both of these companies are not profitable yet. That's first thing. But they are expected to grow faster than the market. So that's why they are called as growth stocks, and you can read more about them. And mind you, I am not the only one who is bullish on these particular stocks. There are a lot of hedge fund houses and institutional who are basically pumping a lot of money into these stocks. So one of the examples of one of the stocks is Kathy Wood. So Kathy Wood is the CEO of ARK Invest, which is a very famous and a popular fund. And her fund outperformed the market by a significant margin in 2020. But 2021, of course, was not a very good year because a lot of the growth stocks were hammered down quite heavily from their all-time highs in the US market. And that is probably one of the reasons that I'm coming up with this particular video, because I think that the two stocks that I'm mentioning have already corrected a lot. Of course, there is a chance of more correction, but the more it corrects, the more I'm personally buying, and I'm basically accumulating these stocks at these lower levels. Because one of the things that you need to understand is that there is a fear of inflation all around. And when inflation rises, the only way to stop that is to basically hike the interest rates. And once that happens, so the most impact is seen on the growth stocks, specifically the two I will mention. They being growth stocks will also suffer along with the whole market, and that's kind of what the rationale has been, right? Since basically the inflation fears have started to rise, and a lot of the growth stocks in the US are coming down quite heavily, and that's where I see an opportunity to invest at these particular levels. So yes, enough of talking. Now let's jump on to these two stocks and have a look at them. The first candidate in our list is going to be Palantir Technologies, ticker symbol PLTR. This is one of the stocks, which is basically American software company that specializes in big data analytics and artificial intelligence. Now, this is one of those stocks that has a lot of controversy on the Wall Street. Basically, there are people who are like super bullish on this particular stock, like I am, and there are a lot of people who do not quite understand how Palantir operates. And given the nature of their particular business, everyone else thinks that they are just another software company. But mind you, if you do some detailed research, you will find out that Palantir is one of those companies which are specializing quite well in the big data and the AI space. And there are, of course, competitors in this particular space, but this is a company which was founded by Peter Thiel. Yes, the same guy who founded PayPal with Elon Musk. And there are a lot of talented folks who are working very hard to basically ensure that the company grows quite well. So the company was basically listed on the stock market, basically Nasdaq, via direct public listing. And what we can see here is that since its listing, it has almost given you a return of almost about 76%. And mind you, it is quite fallen from its particular all-time high. So you can see a correction of roughly about 55% from the all-time highs. And in spite of that, since listing, it has given you a decent returns. And it was listed last year, and not last year, basically last to last year now, 2020. And since then, it has given you some decent returns. That's first thing. Let's try to have a look at the company website and try to understand what they do. So Palantir is basically, as you can see, we are on their homepage. They quote themselves as a foundational software of tomorrow, which is delivered today. Quite a punchline for that particular one. But they basically build software that empowers organizations to effectively integrate their data, decisions, and operations. Now, primarily, they have three products in this particular space. They have Palantir Foundry, they have Palantir Gotham, and they have Palantir Apollo. Now, Foundry is the operating system for the modern enterprises. That's more of a solution for the commercial companies. Gotham is for global decision making. So, Palantir has a lot of clients, and primarily they had a lot of clients in the government space. So, the US government, including the US Army, has had contracts with Palantir, and they have successfully delivered database solutions for some of the very huge clients that we'll have a look at soon. And Apollo is basically for the continuous delivery. So it has something to do with maps. Now you can, of course, go and analyze each one of these products in detail. We don't have the time to do that. But let's talk about some of the financials of this particular company. Now, here I am talking about some of the financials of Palantir and what I see in this particular company. So, see, personally, I think that data is the new oil. A lot of people think like that. And be it any organization. Now, if you're someone who works in the software industry, you know the value of data and the kind of revenue or the kind of improvements it can generate in the business. So, definitely, if you leverage your data in a proper way, there is a lot of business value that can be generated out of that. This particular company is one of the best companies that are doing immense good work in the data space. So enough about that. Let's talk about some of the revenue forecast. So as I mentioned, the company as of now is not profitable, but the revenue is forecast to grow at a CAGR of 27.11%, which I think is quite good. And in fact, the revenue grew by over 43%, and 30% is what their CEO Alex Karp has promised that they can deliver that much. And even if you take a 30% into account and run a DCF, so see, DCF is basically one of the ways to value companies, which is the discounted cash flow method. Now, a lot of people choose a lot of different models for valuing companies, like this particular website, which is Simply Wall Street, which is, by the way, an amazing website to analyze US companies. They run a different DCF model with different assumptions. So, according to them, the fair value of this particular stock is $11.31, and currently it is trading at around $16.72. But I think that their estimates could be different. I am super bullish on this particular stock, and if at all you go by the intrinsic valuation, you would have never invested in Tesla. But the people who went in at Tesla at 300, and almost Tesla is standing at 1200, which is quite phenomenal return in a very short span of time. So not everything can be compared in terms of valuations. Yes, the valuation is slightly expensive, but I think it is justified. And yes, can the stock correct more? Definitely it can. As I mentioned that whenever the rate hikes are going to come, the growth stocks like Palantir are going to witness a lot of pressure. That's no doubt. In fact, even today they have witnessed some really good selling pressure. So if you have a look at Palantir, it has almost fallen by 3.23%. And again, today also I loaded up some shares, and my average is around 16 and a half US dollars. And I will definitely plan on buying more if it falls more. You can see that the stock has been beaten down quite badly. But again, that's where I say that when the stocks are falling, that's when is a golden opportunity to load these stocks in your particular portfolio. So yes, the company is looking quite good to me. The valuations, of course, are a bit expensive. Now, one of the metrics that people use to value companies is the PE ratio. But since this is not a profitable company, you can take it another proxy for the PE ratio, which is the PS ratio, or the price to sales ratio, which is basically the price of the company divided by the total revenue which the company has generated. So Palantir has a price to sales ratio of about 22, which is considered a bit expensive. But again, there are companies. So there's one of the companies which is Snowflake, which is again in this data space. What they do is different from Palantir, but they have prices to sales ratio of over 80, which is heavily overvalued, but still that stock is doing well. So again, these are just numbers. Once the market realizes the true potential of these particular companies, that's when I see that a value unlocking will happen in these particular stocks. And that's when you will see that when people start to understand the potential that data and AI have for the future, then they will probably realize the value of this particular stock, and then it will become basically a mega breakout for this particular stock. So yes, very bullish on this particular stock. And basically the analysts have a very bullish forecast as well. They have a CAGR growth of about 49% for the next 1 to 3 years, and that's quite good. Apart from that, the future ROE is looking slightly negative. I don't know why this website is slightly bearish on the Palantir stock, but I think that it has a lot of growth to achieve in the future. And definitely, Palantir has a lot of good clients that they have worked with, including some of the very big government institutions in the US. And their main growth focus is going to be the commercial space. And again, they are witnessing a lot of growth in the commercial space as well. They are getting contracts from big names. Recently, they closed a deal with a Hyundai Heavy, which is Hyundai. You must have heard about that, the Korean automobile manufacturer. So yes, they are doing some really good work. I strongly suggest you to do your own due diligence before putting in any money into this particular company. But again, it is one of those stocks which I have a very high conviction on, and I am investing heavily in this particular stock. I might be wrong, but being someone who understands the potential of AI and what business value it can unlock for businesses and companies, I am someone who is quite bullish onto this stock, and I'm all in on this one. So yes, do your own research before investing in this particular stock. Enough about this one. Let's go to the next. The second stock on our list is going to be SOFI Technologies, ticker symbol SOFI. And again, this is one of those fintech companies which is quite good. And let me talk about why. If you go to the website, SOFI is basically that one super money kind of an app where you can do everything related to finance in one single particular app. So you can invest into stocks, into cryptos. You can get personal loans. You can get student loan refinancing. That's quite good. You can get home loans, credit cards, and everything related to finance under one particular app. Isn't that awesome? Now, their USP is basically to have one particular app for a customer, because generally, if you are a customer, if you need a bank, then you will go to, if you need a loan, you will go to a bank which offers you loans. If you need a credit card, you will go to again a bank. But what if you want to invest, or what if you want to basically do some insurance for yourself or your family members? So all of that is quite a pain point for a lot of consumers, and I think SoFi does a very good job of integrating all of the financial needs that a human being has and bringing it under one single app. So that's one thing. And secondly, they have also applied for a bank charter license. So SoFi is basically planning to get a bank charter license, which will officially make them a bank in the United States. Now there has been some delay for that, and that's why the stock is being hammered quite heavily. But what I believe is that once that bank charter is approved and the news is out, the stock is going to become a rocket and it's going to give a massive breakout once again. But again, SoFi is one of the such stocks which have a price to sales ratio of about 11. So again, it is quite justified being a growth stock. And again, people are quite bullish on this particular stock. And a lot of people believe that SoFi is again going to revolutionize fintech and is going to be a massive gainer in the future. Again, the earnings are forecast to grow at a rate of 60.96 CAGR. Now you can imagine that sort of a growth, and that's why I am heavily bullish on this particular company. Now, in terms of valuation, they basically haven't calculated the fair value, because they say that the data was insufficient to calculate the fair value of SoFi. But nevertheless, I think the stock between $13 to $14 is an amazing bargain price to buy and load on these particular shares. That's first thing. PS ratio I talked about. P ratio is not possible because the company is not profitable yet. But PS ratio, which is price to sales, I talked about, is around 11 for this particular stock, which is quite decent, I would say. Future growth, there's no doubt. The analyst expectation is about 61% compounded annual growth rate, which is quite good, I would say. And talking about again some of these things, so SoFi is forecast to become profitable over the next 3 years, which is considered faster growth than the average saving rate, which is 2%. And again, these are the plus points that you can read about. Now, again, I'm pretty optimistic about this particular stock. The simple reason being that SoFi, first of all, eliminates a lot of pain points that people have. And secondly, it is trying to bring everything under one roof, which is quite amazing. And again, they have really good customers and revenue. So they are doing quite good. And once the bank charter is approved, I think that this is another stock which can fly very high. And again, you can imagine some really good kind of returns from these particular stocks if these two picks are doing well, which you selected. Because see, there is always a valuation concern when you are investing in the growth stocks. A lot of these rich investors who are like millionaires and billionaires are probably not into these growth stocks because see, they have a lot of money. If they park some of that money and if they are able to get, let's say, 12 to 15% CAGR, they are quite happy with that. But for someone like us, which is let's say a retail investor, if you pick the right value stock at the right, sorry, a right growth stock at the right time, and you invest in decent amount of money into that, and even if that, let's say, becomes 20 times or 30 times, or even becomes 100 times in, let's say, 20 years, so that is quite great. I will give you an example of Tesla. So Tesla, if I talk about this, so Tesla once used to be a stock which was worth only $4 in the 2010s, and you can see since then it has made your money almost 275 times. This is great. In fact, 276 times. So this is quite amazing. You can have a look at the return for yourself. Now, every company can't be Tesla because not everyone has a genius leading them like Elon Musk. But nevertheless, these two stocks are really good, and I have a pretty high conviction on them. I am buying them heavily. I know they can slide more. Definitely, it's not been a very good year for the growth stocks, but there could be further pain in 2022 as a lot of analysts are expecting at least 3 or 4 interest rate hikes. And when that happens, definitely there's going to be some pain. But why am I accumulating right now? You never know the bottom, right? So the more it falls, I am loading upon cash and I'm basically waiting for the dip. So yes, inflation is an issue, but it's not going to stay forever. Maybe in 2022, after 2022, it would be gone, and the markets can probably take some recovery. So yes, this was our video. And by the way, if you're new to US stock markets and want to start your investing journey, you can open the link in IND Money. That's one of the best brokers that offer you really good deals and almost negligible charges on converting your rupees to dollars. And they have a really good platform. So you can check out IND Money. The link is in the description. And I think that's one of the best ways that you can invest in the US stock markets from India as of now, because the other options I know involves a lot of hidden charges and a lot of heavy charges when you're converting your rupees to the dollars. So yes, this is a small video. I know it's been a long one, maybe longer than our usual duration, but nevertheless, I hope you enjoyed this particular video and gained something new out of this. I do plan on bringing more US investment related videos. So yes, if you are interested in that, please click on the subscribe button if you are new here. And if you appreciated my hard work and my rambling for the last 15-16 minutes, do consider pressing the like button. And if you have any comments, do let me know in the comment section. I'll be happy to answer those. So yes, this is it for this particular video. See you in the next one then. Take care and bye bye.